Hey, good morning, everyone, or good afternoon, depending on where you are. Thank you for joining the masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. And today we're going to talk about strategy, trading and strategy elements, specifically Portfolio Maestro and some of the utilities in there that can help you, backtest a portfolio of symbols. If you haven't watched my prior presentations on Portfolio Maestro, they go into details about the basics and how you can get it started. I will give you a brief introduction today so that you're not completely lost, but we are going to focus on a particular feature of Portfolio Maestro, which is a higher level or a higher level of feature that is not just basics. So there's I believe there's two already that I did on Portfolio Maestro. One which is just an introduction, the second one which is ranking, this third one which will be money management, and I think there's one left that we have to do on portfolio level stops. So we'll take a look at that, I think, next week. Okay, before we get started, here's the usual disclosures. Keep in mind that every symbol and idea that I talk about in this presentation is for educational purposes only. It is not a recommendation of TradeStation, especially when we talk about strategies. TradeStation is not in the business of saying this is better than that. Also, past historical performance is no guarantee of future results. So if we pull up a report and it says that it made $20,000 in the back test, that's no guarantee that it'll do the same thing going forward. Remember that online trading is not suitable for everyone, and it should only be done with risk capital. For anyone that needs additional information on these disclosures, you see the link right here on the PowerPoint slide, www.tradestation.com/important-information. And I always forget to provide you guys with, I'll always forget to get the link ready. Not that I forget to give you guys, but let me go ahead and set my media server and I'll upload this document so that I can share it with everyone here in class. All right, give me just 1 minute. All right, let's send this to everyone. Perfect, so that's a link to the PDF. So let's go ahead and talk about money management and how we can implement money management and risk management on a portfolio level. We're going to talk about different examples, and we're going to try to introduce this idea of doing things to the portfolio backtest. When you backtest a strategy raw, I'm saying without any additional, ranking, no additional money management, or no additional stops, the strategy just does its thing. It calculates the rules and it's going to enter and exit trades as it was designed to do without any limitation. So if you have a portfolio backtest and you're using, let's say, 30 symbols, and all of a sudden the strategy decides that it's time to trade all 30 symbols, of course, that's going to expose your account to risk. So it is important that as we backtest these strategies on a group of symbols, we have a mechanism where we have to decide, okay, which symbols are the ones that are going to be traded and how much of the symbol is going to be traded. So money management, just to talk a little bit about what this is. By the way, this information is in your PDF. The settings themselves specify, let me see if I can turn on my laser pointer. Here we go. The size of each position within a strategy group as a form of risk management. So this part of money management is all about your exposure to the market on each one of these symbols that are going to be traded. Why is that important? Because of risk. By default, the position size is set to a fixed number. So you're trading 100 shares if you don't specify it in easy language, or if you don't, change the number of shares you're trading, the default is going to be, the default size is going to be 100. But this is going to mean something different depending on the price of the stock. It will have a larger impact on positions that are priced higher. Here's an example. Consider the impact on a portfolio from a 50% decline. in a traded symbol if it was bought at $10. If you buy something at $10, let's say you buy 100 shares and it drops $5, if you multiply those $5 times the 100 shares, it gives you a loss of $500, right? But if you trade a symbol that is worth $100, the 50% drop represents $50 of that 100. And $50 times the 100 shares that you're trading, of course, is a loss of 5,000. So on one side, we have a loss of 500, and another, it's a loss of 5,000, considering that it's the same percentage price drop. So you can see the difference between the two symbols. One, you have bigger exposure, bigger risk, because it's a higher priced symbol. So in the money management feature of Portfolio Maestro, we're taking a look at the value of the symbol or other factors so that we can reduce that risk exposure. A trade size method can help normalize the risk taken per position and function as a defensive trading mechanism. The position size can be based on various factors, including equity and volatility factors. We're going to take a look at a few of them, maybe not a few, maybe a couple, just so that we have some examples and you can see where to get them, how to apply them, and what effect it would have on your portfolio. It is interesting here, this last statement that it makes, that it normalizes your strategy because you're providing every position the same exposure on the risk side and also on the reward side. So yes, to a certain extent, normalizing your positions not only reduces your risk, but it also reduces your potential of profits, because we know that in trading, there's always some highlights. There's always a symbol that is going to be more significant than the others, and there's going to be always a symbol that pretty much saves the boat, to say it that way, where it just keeps everything afloat, everything positive. And if it weren't for the profits of that symbol, maybe the whole back test would be a loss. So those are things that we need to consider. What effect applying these money management features has on our portfolio. In the PDF, I provide a brief description on each one of the strategies for money management. You can see at the very top of this table, it starts with none, and that's the default for Portfolio Maestro. No money management strategy is applied to the strategy group. Then we have easy language. So the position size is based on custom easy language strategy. So you'd have to programmatically decide how many shares you're going to be using. The ones we're going to be looking at are not the top two. We're going to take a look at probably a fixed amount, where the position size is based on an amount of money. So you're dedicating the same capital to each one of your positions, and that way normalizing the risk across all your positions. Fixed amount with ATR risk, fixed fractional by market value, fixed fractional by price. Interesting. And it continues on the second table, fixed fractional with ATR risk, fixed fractional with margin, with standard deviation risk, a fixed quantity. Well, fixed quantity, it's kind of the default, but you can also select it here as one of the money management strategies, and quantity per amount. Okay. So those are it. And we're going to take a look at a couple and see what effect it has on our portfolio numbers. To access the money management strategies, click on the Manage Strategy Groups icon from the shortcut bar. So don't stress if you don't know where this is. I'm going to show that to you right here on the screen. Then click on the Money Management tab and select the desired money management strategy from the drop-down list. I'll show it to you in just a moment. It's here so that if you kind of forget where I showed it, then you can come here to the PDF and just follow the menus. A possible drawback, and we alluded to this when we were talking about what are the benefits, of using money management strategies. One of the drawbacks in money management is that you forego potential profits by trimming equity exposure versus having a larger equity exposure using a fixed number of shares when the position is moving in the right direction. Yeah, so if you're normalizing all your positions, you're making these symbols that we talked about that were the highlight of our historical back test, you're probably truncating their profits because you're normalizing everything. You're giving those symbols the same exposure. Keep in mind that this drawback can become an advantage by possibly limiting losses in a position if the position goes against you. So you for sure cannot have the best of both worlds, you know. Either you allow the strategy to have risk and exposure based on the symbol's value, or you normalize everything and it's a give or take, you know. So you have to make sure that you practice applying these money management strategies to see if it's something that helps your strategy or not, because they can certainly have a significant impact on performance. Okay, so this is the end of the PowerPoint. You have the disclosures right here. Let's go over to TradeStation and do some practice and see how these money management strategies can help or hinder our performance. Let's go here to apps. I'm gonna pull up Portfolio Maestro. We were working on ranking last session, that was last Wednesday. And we used a custom strategy that would just enter. Why don't we just use that same strategy? Why not, right? We called it ranking values. Let me go ahead and go to manage portfolio. This is the portfolio. It's called the ranking portfolio. If I backtest this portfolio, let me use something else, because if you guys remember when we were doing this class, the strategy that we used enters a trade on the very first possible bar, and it keeps those trades open until the very end of the backtest. So it's not a real strategy. The way that we wrote the strategy was for us to keep track of which symbols had been traded and which ones didn't trade, and how ranking made it possible for us to change or shift the way that the symbols were traded. But let me go ahead and create a new strategy group. So I'm going to come here to manage strategy groups. I'm going to create a new one. So I'm going to click on new right here on the top left. This will be my money management portfolio. Or this is not the portfolio, this is strategy. All right, so I'm going to click OK. I'm going to do it on equities because we're going to use symbols. We're going to use equity symbols just as an example, no other particular reason. So I'm going to click OK. So that strategy group shows up right here at the bottom. And I'm going to add strategies, and then I'm going to add symbols. I'm going to add a strategy first. Let me do something that we can all relate to. I'm going to do MACD, just a regular MACD. Everybody has that on their own TradeStation. So I'm going to select the MACD long entry and the MACD short entry. With no additional stops or targets, I'm just going to use them as they come just to see what type of report I get. I'm going to click OK. So the two strategies are up here. I'm going to use default settings as well. And from here, I'm going to go to the symbol list and add a symbol list. I believe I created a custom symbol list last time that we were working on this strategy. And I called it sample 10 symbols. Let me add in more symbols than this. In fact, I'm gonna trade the Dow 30, which I also created as a custom symbol list, because if you guys remember, when you use the Dow 30, if you pull it up from the TradeStation symbol list, there's a section there that's called index components, and it has a symbol list for the components of the Dow Jones, but it also includes the index symbol, $INDU. So I just removed that top symbol and I created it again as a custom symbol list that is just the Dow 30. All right, so let's go ahead and put that in. If I click on the plus here on the far left, I see all the 30 symbols of the Dow Jones. And that's it. I'm going to back test the portfolio just to have an idea on how this performs. I'm going to go here to manage portfolio. I'm going to create a new portfolio, and this is going to be called the money management portfolio. And I'm calling it money management because we're using the money management feature. We still haven't used it. We still haven't applied it. We're just doing a regular back test on a portfolio of symbols, but we're going to get there in just a moment. I just need a way for comparing my results with and without. Okay, so let's go ahead and click OK. Once I have my portfolio created and it shows the name right there at the bottom, I'm going to click on Add Strategy Group because this will link to the strategy that I just created. I created a strategy called the Money Management Strategy, which has the MACD and it also has the Dow 30. I'm going to click OK, and there it is. I see pluses, so it allows me to expand if I want to see more details on what I just added. But I'm not going to change anything. I'm just going to back test the portfolio. So I'm going to click here on this button on the far right. This will be a back test on 2 years of historical data. Let's increase that. I'm going to say 5 years of historical data. I'm going to use strategy inputs, same ones, symbols. Okay. Now the data, if we go here to, because I want to see, before I even go here, where do we set the time frame? I think the time frame is set here on the strategy, on the managed strategy group side. So we have the Dow 30. Here we go. There's a button here for interval settings. So that's set to daily by default. So I wanted to show you this because when I was about to perform the back test, it said, okay, how many years of historical data do you need? I said 5, but I wanted to make sure that it was daily data, not 5 minute. I mean, you can change it to anything you want here, but this is, you have to go back to the strategy group, do the interval settings in there, and then come back here to the portfolio button where the portfolios are listed. And I'm going to do back test portfolio one more time. I'm going to increase the historical back test to 5 years. And that's it. I'm going to perform the back test. This should be rather quick. Okay, that's progressing. It finishes. The analysis is completed. And I'm going to click on View Report Now. All right, so this is the report. Let me take a look at some values here. Total return. It's negative. So not a good strategy, which is okay. That's fine. Let's see if we can reduce some of the exposure of the strategy and which symbols, were the ones that generated the most loss. Here's a summary. So it gives you a summary for all 30 symbols, how much would have been generated. My gross profit is almost $1 million, but I gave all that back. I gave all that back and a little more, $825,000 back. We do have an open trade P&L. So if you look over here, the trades that are open at the moment, we have $20,000. So in reality, the overall performance, if we were to close all the trades, would have been profitable. So those the open trade P&L is a value that is not available on the regular back test. On the regular back test, it only counts trades that have been closed. But here we have a calculation that also takes a look at any trade that is still open in the strategy, and it tells you how much money those trades are making, and you can see that value reflected here on the report. If I go to the trade analysis, it gives me a little bit of the same information, but on the trade analysis, I'm able to click on this button down here, bottom right corner. It says View Hide. It allows you to see the individual performance of each of the symbols that you back tested. So I'm going to select them all by clicking on the very top checkbox and click OK. So now it shows you all the symbols in the back test. I won't be able to rank these based on the net profit. I see American Express has a loss of 13,000. That was a big loss on American Express. We have another loss here on WBA. Let me scroll here to the right. So the biggest loss No, it's right here. Microsoft is the one that generated the biggest loss. The biggest loss was $16,000. So what we're trying to do is probably reduce some of that exposure by looking at ways in which we can manage our risk. If you guys, we haven't checked, but if I go to the trade list, and if I go to the, see there's a quantity column right here. Everybody sees that? And you see the number of shares. This is trading just the standard 100 shares for each one of the symbols. But it makes sense, you know, that Microsoft, I'm not sure if it's the most expensive stock, but Microsoft is rather expensive. So it makes sense that that is one of the ones that is going to generate most loss. On the positive side, we have BA giving us, you know, a profit of $21,000. I think that is the biggest. Home Depot is also giving us a gain of $21,000. So those are the symbols that stand out. Always look at, you know, at the maximums and the minimums, because once you do the money management strategy, it's going to normalize all your trades. So some of these losses may not be as big, and some of the winnings may not be as big either. So let's go ahead and take a look at how we can apply this money management strategy. I'm going to go here to portfolios, click on manage portfolio one more time, and portfolio settings. These are portfolio stops, constraints. It's not in here. On money management portfolio, currency. So you have to go to the manage strategy groups. It's interesting that the money management is not done on the portfolio level, and I would think it would. So they kind of separated, you know, stops. So you have ranking and money management, and you have those inside of the strategy group. And when you go to the portfolio side, you have portfolio stops and constraints. We're going to talk about these two next week. But let's go ahead and click on manage strategy group, click on money management. And as you can see, the default method is none. I'm going to go and select the most simple one, which is, oh, and before I even change this, I wanted to show you something else. Let's go back here to the reports. I'm going to go back to the performance report. Remember that when you run the performance report, at the very bottom, you have a record of every time a report is ran. And let me see, this is the name, and this is the date. So you can see that the date was today, August 31st. So it keeps a record of every single report you run so that you can compare. But what I wanted to do is take a look at the equity graphs. I'm gonna go here to the graphs, and I'm gonna go to the equity. This is my equity curve line, which is, you know, the equity curve line inside the portfolio Maestro starts at 100,000. This is something that, you know, the strategy performance report doesn't do. The strategy performance report starts at 0, but this starts at 100. And of course, anything that goes below that, it's a loss. You're giving back what you started off with. Now, this went down as low as, you know, the high 30,000s. And of course, it's recovered. It went all the way up to 200,000, so it made double what I started off with. But then at the very end, it kind of just ended up where it was at the very beginning. We know for a fact that it kind of is losing about $13,000 at the moment. So that's what it is right now. Okay, you can hover over any of these data points and see what the actual equity is. So you can see that on 8/30, which is yesterday, the equity was 96,466. So that's a loss of about $3,500, which is reflected on the summary. Okay, but what I wanted to show you here as well is that you can change the type of equity curve line and show it by symbol. Symbol cumulative P&L by date. Total P&L by symbol. Let's go to symbol cumulative P&L by date. Okay, and total P&L by symbol. All right, let me look at the other one. So symbol cumulative P&L by date. This is very telling, because this is pretty much an equity curve line for each one of the symbols that the strategy trades. So you can see which one is higher than the other. Now, I might be able to tell which one's which. Now, if I hover, it says that this is the cumulative P&L for GS. So this is one of the symbols that lost significantly. This one right here, it's American Express. We saw that in the report. Remember that it stood out as one of the losing symbols. Here towards the top, though, we have cumulative profit for HD went up to 20,000, and the other one is that's HD. Which one is the other one? Oh, BA, which 17,000. So yeah, what this graph right here that you're looking at is going to change significantly because now we are going to be normalizing the exposure. You're not going to have symbols, going rogue and losing a whole bunch of money because we're limiting the risk by managing the size of the trade. But that is also going to normalize the winnings here. So you're not going to have any symbols that go off and make you thousands and thousands of dollars. Let's go ahead and remember what this graph looks like, and let's go and apply our money management. Let me go here to portfolios. I'm going to click on manage strategy groups. The money management that I'm going to apply is a fixed quantity, fixed amount by price. So the fixed amount here is $10,000. I'm going to leave it as is. We can always change it and see what are the results we have. But what this means is that it's going to spend, or it's going to invest $10,000 worth of a particular symbol. So if the symbol is worth $100, you're going to end up with 100 shares. 100 times 100 gives you 10,000, right? But if the symbol is worth $50, then you're going to end up with 200 shares. If the symbol is worth $1,000, then you're going to end up with 10 shares and so forth. So I'm just going to do the math and make sure that every position is worth $10,000. Maximum quantity, 5,000, and round quantity to the nearest single share. So if it has to trade one share, that would be the minimum that it trades. Okay, so I'm going to leave the defaults. Let's go ahead and just leave it on. When I go over here to the strategy, or let's go to the portfolio here. Now, if I go to the portfolio, you can see that it added the money management strategy to the list of strategies. Not only am I using the MACD, but I also have this money management that manages the size of my trades. I'm going to back test the portfolio one more time using the same settings and just click on perform back test. This will take 10 seconds. Okay, let's view the report now. Okay, this takes me to, let me go to the summary first. Okay, in the summary, I lose more. I lose about 22,000. I think that when we ran it last time, my loss was about 3,500. Let's go to the trade analysis and view all the trades. Okay, AXP is not losing, the $13,000 it was losing before. Now it's 8,000. But some of these profits, like for example, BA is not making the $16,000 it was making before. Now it's only making 10,000. So it normalizes the trades. It removes the extremes. So sometimes that works in your favor and sometimes it hinders your performance, right? So that's something that we have to be aware of. Now, if I go here to the graphs, there's one symbol though. This is WBA, lost 18,000. This is just cumulative. So that could be very well That could very well be true. Let's go here to the trade analysis. And BA is right here. But why doesn't it show me? This is the total return, total profit loss from closed trades and open positions. Because the graphs here tell me a different story. It tells me that, oh, I think am I looking at the right symbol? So this is not BA, this is WBA, it's different. So trade analysis, let's go to WBA. Okay, here it is. I was getting this confused with BA, it's WBA. Here we have the loss of $17,000. Okay. How many shares are we trading of WBA? Let's go here into the trade list. And here's where you see the variability on the sizes. Before we were seeing 100, now we are seeing odd numbers. For WBA, let's see if I find, let's see, can this be filtered anyway? It can be sorted. So let's go here to the bottom for WBA. Okay, so yeah, this is, I guess, is one of the cheaper stocks because it's trading, 200, 243, depending on how the trades went. But once it added all the losses of this, then it generated a big loss. See, let's see, WBA, we have, it goes from trade 25. Oh, but this is sorted differently, so I can't really say how many WBA trades there were. But you can already see how the variability of the shares kicks in. This is something to keep in mind when we look at the graphs over here. So this is cumulative. Let's see, equity, realized equity. Okay. Excellent. Let's go ahead and take a look at another one. Let's go over here to my portfolios. Let's go to manage strategy groups. I think we have time to take a look at another one. Let's go to money management. And instead of a fixed amount by price, let's see. With ATR risk, so percent risk 0.05, ATR multiplier 1, ATR look back 10. So this is going to take a look at the ATR, which is a measure of volatility. It's going to see how the stocks are moving historically. We have a percentage risk of 0.05, percent of equity to risk. We can probably increase that a little bit more. I'm going to do 1% and see what happens. No, 0.05 is actually 5%. Although sometimes, it depends on how the percentage is expressed. I was thinking about 0.05 as, 0.05 of 1%. But this is just a decimal way of expressing percentage. So 0.05 is actually a 5%. Interesting. If I go here to manage portfolio, see the money management strategy has been replaced with an ATR risk, and I can backtest the portfolio one more time. And I can view the report now. This graph says no data available because it feeds from the addition of all the different symbols. So if you come here and it says no data available, just remember to go to the trade analysis because it doesn't have all the symbols by default. Click on view hide, show all the symbols by clicking on this checkbox so that they're all checked. Click OK. And now you have, all the symbols visible and each one of their performances towards the summary. But the total return, we see that we see a big loss of $187,000. So it seems like that ATR management risk didn't quite tell us how many shares to trade. Let's go to take a look at the trade list, because the quantity, oh, that's because of the quantity. Everybody sees the quantity. We're talking about 5,000 shares, 1,000 shares. The reason for that is because we told it to risk 5% of your equity. Now, the equity line, if you guys remember, starts at $100,000. So 5% of $100,000 is $5,000, right? I wonder why. Let's go back here to portfolios and try something else. I'm going to go here into money management. It's a percent of equity to risk. 0.05 ATR multiplier of ATR risk. Look back, maximum quantity, minimum quantity. So this percentage right here, it's a little high. If we set it to just 1%, let's go ahead and see how that changes everything. 1% risk, here we see the percent risk. There's no more than 1% of equity. Back test portfolio one more time. So if you guys remember, we were seeing, trades of 1,000, 3,000, 5,000 shares. I saw some trades that actually reached the maximum number of shares. View the report now. So you can see this, the quantity here is affected significantly. Now I don't see any trades of 5,000 because we reduced the risk exposure to 1%. We still are at a loss, but it's losing, half of what it did last time. So something's going on here. Now, how is it being calculated exactly? That's a good thing to look at, because I would want to sit here and try to figure out, okay, why is it that on December, this is December 21st of 2017, why did it trade MCD? Why did it trade at 431 shares of MCD? Because this amount is based on that ATR risk. But if I'm telling it, not to risk more than 1% of my equity at the very beginning of the back test is $100,000. So 1% of that is just $1,000. So I'm not sure why it's trading $431 of a $172 stock. That doesn't seem like it's just risking 1%, right, of the equity. I think that this happened also last time when we were talking about ranking strategies. I would have to sit here and try to figure out, where the values come from. But I know that you guys are probably going to be using this. If you see any issues with the calculations, please let me know. I'll get some engineering, to look at the calculations if you see an issue. I'm pretty sure there's got to be a formula behind this. I don't have the details on the formula. I'm going to assume that whatever description I see in the documentation, that's exactly how it's calculated. Just looking at it briefly doesn't quite make sense to me. But if you guys are going to start using Portfolio Maestro and would like to know where these calculations come from, especially when using these type of features, let me know and we'll get to the bottom of this. But I wanted to show you that the features there, that it does affect the number of shares that are being traded. So these are money management strategies that you can apply to the whole portfolio, and it affects the whole portfolio as well. So that's it for my class today. Thank you guys for joining me today and for all the masterclass sessions. Tomorrow, I think tomorrow we have, do we have John Brook tomorrow? Well, let me just, John Brook is going to join us tomorrow at 11:30 in the morning. Remember that the session on Thursdays is 11:30. So looking forward to seeing everyone there. Thank you for your time. Have a wonderful afternoon, and thank you for joining me today. Bye-bye.